Awesome. Welcome to episode 8. We are talking about how to evaluate risk and making investments. Can't wait to dive into this one. See you on the other side. Awesome. We're talking about how to evaluate risk and making investments. Super pumped to this one. A lot of our theme has been, money, success, freedom, things like that. And I really want to talk about how we both look at risk and what is the definition for us? Because it's a lot about defining things, and you need to define risk for yourself and what risk you're willing to tolerate. Because risk is, you're going to have to take it, because you're either going to suffer the risk of an investment or you're going to suffer the risk of regret of not taking risk. Like the biggest risk you can take is not taking any at all.
Sitting on the sidelines.
That's the biggest risk ever. So how do you evaluate risk in an investment? And then when it comes to making investments, like what amount of risk are you willing to tolerate? You know? And that's where I really want to dive in. So first thing, when you think about risk, when it comes to business, what resonates with you when it comes to risk?
So specifically with business, you're risking your assets. Assets are what for us? Like our assets are people, right? So if we're going to go into a deal with a new client, then I'm thinking about my team, the kind of time that it's going to take my team to work on said deal, to help to close said deal.
Yeah.
And then on the back end, because, and I'm speaking about a vertical that we're in the medical space, right? On the back end of that, there's work to be done to maintain, right? To maintain like what I call a customer experience, right? Yeah. So when I'm thinking about risk for me specifically, it's what am I risking in terms of time for my team? What am I putting on the table in terms of time for myself? And then is it worth it for this deal, right? So it's in your space, Chad, that risk, that the mitigation for that's going to be completely different, right? But for me, that would be an investment in time, an investment in personnel, an investment in like preparing for the deal, and then essentially like, is this worth it? And am I going to risk my team's time? Am I going to risk my time going after said project? Right. And then I've had some that have been great. I've had some that have, been a massive failure. But over time, you learn how to calculate that risk, right? So like, what's the potential loss, right? And then for us, like we can actually equate that to a number, right? Because I know my team, I know what every single person is worth and their time as the week goes, as the day goes, even down to the hour, right? And like no one within my company looks at that but me, but it's massively important. So you've got to be able to know those details in order to make a calculated decision, yet still pull the trigger and take the risk that you think it will pay off. Right.
And then understanding what that deal is going to net, to you and your company. And then you can correlate that to the amount of risk for the personnel costs that you're going to incur. Right. For us, our main risk is capital. So like when we're doing a big real estate deal, we're putting millions and millions of dollars up of most of the time other people's money. It's a lot of our money. We put our money into our own deals, but 90% of it is typically other people's money. So, and I have a fiduciary responsibility. I treat that money with even more care than my own, because I know that a lot of people are doing self-directed 401ks with us. They're directing their IRAs. They're investing like their nest egg a lot of times into these deals. So selecting the right investments, right, from a real estate standpoint, selecting deals in the right markets, mitigating the amount of risk that we're taking based on the age of the assets, like things like that, and how to mitigate as much risk as possible, because you're never going to eliminate risk. It will never be eliminated. So if you're waiting for this investment to come along that just carries zero risk whatsoever, you're going to keep waiting because all of them have investments. It's about looking at the ones that carry the least risk, but typically the ones that carry the least risk have the least returns, because risk and returns are 100% directly correlated. So, you can get into a really risky deal, like maybe a crypto play, and it has, a 300x return, but you could also lose your money tomorrow. So, you can get into, one of our plays, and we're trying to double your money every 5 years. So we've successfully, every exit that we've had, we've doubled investors' money in less than 5 years. So I've been very fortunate to pick good deals.
That's remarkable. But
and we're returning on average probably 20% average annual returns to our investors. And there's some pride in that, because the amount of risk that we are taking on to make sure that they, I'm signing on the debt on all these notes. The leverage, the bank is leveraging the property, but I'm personally guaranteeing every one of these projects. So if these things go south, Like I lose everything.
Yeah. So there's two sides to the risk for you, if I'm understanding that correctly, right? Because you have oftentimes these people are putting up personal capital, which you have a fiduciary responsibility for, right? So then you're risking theirs, right? But then B, you're also risking your reputation and your time and energy into the deal, right? So you've got two levels of risk. Right?
Yeah. And when you're making this, you need to find out what your tolerance is for risk. And it's completely like people ask me, I've been in some coaching sessions and people ask me like, should I make this investment? Or, hey, I have, $300,000 in equity in my home. Should I pull it out and do this? And like, my answer is always, hey, it depends. There's a lot more questions that I need to ask to understand if that's too risky for you to do right now. And it depends on what are your alternatives? What is your current situation? What are you making? Like where is this money going? What is the security of that investment? Because, pulling out $300,000 against your personal home and putting it into one bucket, I may say is a terrible idea, but putting it into another bucket might be a great idea. And it just depends on your level of tolerance for that risk. And it's a person by person thing. Yeah. But make no mistake, you will have to take some at some point if you want to be successful, whether it doesn't have to be financial, right? It can be just, going out on your own or starting something or putting yourself out there, like the risk of rejection, right? How often do we talk about like knocking on a door and risking that slams in your face? Yeah. And people aren't willing to even take that risk, which is at the very base. And we talk a lot about opportunities and put yourself in the right room, risking looking a little stupid maybe in the beginning. Yeah. For long-term gain, because that risk always correlates into the wins later on.
Totally agree.
Yeah.
Yeah. And in that situation, you're risking your ego really. Like, can my ego take a hit on this? But am I willing to do that to look silly or to look stupid doing something, whether it's doing something for the first time or something you've done multiple times, but you still, like you said earlier, you're an introvert who can basically act as an extrovert when the situation calls for it. Yeah. Right. I would say I'm the same. If I was to tell you 20 years ago that I would be doing a podcast with Chad King, I would say, dude, you're fucking crazy. Like that's never going to happen. You get nervous reading a poem in front of your sixth grade class. Right. Like it just wasn't in the cards. Yeah. But over time you learn that shedding that and taking that risk is 100% worth it. And what I want to encourage people to do is take the fucking risk. Yeah. Like make it calculated, right? Like think about it. Don't go blindly. There's a sign in your office over here. I noticed it says ask more questions. Yeah. Right. So if you're listening to this, we're on episode 8, I think. Yeah. In at least 3 episodes, there's a recurring story, recurring thing. Ask good questions, which you do before you make any risk, right? It's part of the risk assessment.
100%. Yeah. But you also to the flip side of that coin is you also need to know when it's time to be done asking questions, it's time to take action. Because we talked about early on the seminar junkies are the people that are constantly consuming information to a point of paralysis. Yes. Absolutely. And those folks are just constantly they're asking too many questions. And then my advice to them is, dude, you just got to go. Yeah. Because you'll figure it out. Like jump and build the plane on the way down. And that's what a lot of people don't want to do. They look at the edge of that cliff and they're waiting for the wings to pop out. But you grow them on the way down. Yeah. And you're gonna hit some rocks and you're gonna nail some twigs on the way down. Like that fall may not be fun, but eventually, those wings will sprout and you'll be able to fly. And that's what. People see, a lot of entrepreneurs who have taken that risk and they see them flying and soaring and they're just like, man, I wish I could do that. Well, you can. You just haven't taken the chance on yourself.
You can do all of it if you find the right vehicle, right? But taking the chance on yourself it's like literally step number 1. You have to be willing to do that and to take the risk.
Yeah. And so transitioning into making investments. So evaluating risk is one thing. And then actually making the investments, like we talked early on about the first investment you should make is into yourself, right? We talked about our coaches, how many we have, what we do. First investment, always into yourself. Then once you invest in yourself and you develop the skills, now you can invest in some systems and some processes to build your businesses, right? Get your businesses cash flowing. And then you start to make investments into assets, hard assets that produce income, businesses, cash flowing businesses that are producing income so that you can get out of the rat race. And when it comes to making investments, right, that is where you can invest in people, products, you can invest in process, you can invest in real estate. There's so many different things, stock market. That is where all those different things carry different levels of risk, and all of those different things carry different levels of return.
Yeah.
So understanding the concept, going back to the episode about like concept of money and how money works and how money flows, it's directly correlated to risk and making investments, because when you debunk this thing that money, like that money, you have the scarcity mentality and you debunk it, that money is abundant, right? You're going to be much more willing to risk it and get far greater returns if you have detached emotionally from it. Mm-hmm. So when I make an investment that is outside of my main vehicle, like I typically will like I bought a bunch of bourbon barrels, right? Recently, you probably heard about that, right? Bourbon barrels.
Yeah.
I made that investment and sort of emotionally detached from that money. It has actually been my best investment that I made over the last 5 years. That has grossed the best return. Apparently, bourbon has just skyrocketed. Yeah, bourbon barrels.
Well, if you go anywhere in Nashville, a bourbon is like
sure. But I didn't know. It was just it wasn't. I thought it was kind of a safe investment, hard asset. You could touch it, feel it, see it, smell it, taste it. It was bourbon. Right? I don't drink bourbon.
Yeah,
I'm not even in bourbon. but I invested in bourbon barrels. Yeah, and they're up like.
You did this investment with another person, right?
Yeah.
Yeah. Okay.
They're up like 60%.
Yeah.
It's crazy. Nutso.
Yeah. So can I submit something to that, or add something? Is, we talked earlier in another episode about raising consciousness and awareness, and now we're talking about risk mitigation, knowing when to jump in, knowing when to pass, right? Like if you have 100 things that come across your desk, you're saying no to 99.
Yep.
Right. So you've kind of figured that out. Yep. Safe to say. Through repetition, right? Yep. And through failures and learning and et cetera. Mm-hmm. But, there's something I think is something bigger at play, in my opinion, and that is this is the buzzword. So here's another buzzword, but the law of attraction, right? So you just described an investment that you actually didn't know a whole lot about.
Yep.
But you thought, well, it's something that I can see, touch, taste, smell, et cetera. So it's a hard investment. It's not frou-frou. It's not crypto, to reference that again, but there's something to that, because in my opinion, you've now raised your level of awareness and consciousness. And again, this is not woo. This stuff is backed by science. Like the universe is returning money to you because it knows that you will do good with it.
Yeah.
Right. It knows that you're going to turn around and probably give that away.
Yep.
Or you're going to reinvest into something else that's going to be helpful to you, to your family, to your business, to other friends. You have a hard money lending company, right? Like, so the universe knows that if I deliver this back to Chad, whether he knew anything about it or not, I know good will come of it. 100%. So I'm going to keep sending it there.
Absolutely.
Right? Because money is energy. It's not just dollars and cents on a digital screen.
Yep.
Right? Like, and I just believe that matters. And I think people need to understand that. If you don't understand that, please take a deeper dive. There's a lot of content out there.
Yep.
And this stuff is proven now. It's not woo woo. It's real.
Yeah. And if you believe it's an energy and you believe energy is meant to flow, like you will realize that you detach from it and start to let the currency flow, and it'll flow back in droves.
Exactly.
Droves. You let it go and surrender to the universe with good investment. Like we talk about making wise investments, right? Yeah. Don't just buy something you have no idea about. And believe it or not, like that opportunity I was investing far more in the operator, because the guy who was running the project was like this bourbon connoisseur, had this background. Like 9 times out of 10, the investment you're making, typically it's the operator behind it and the person. You're investing in people 9 times out of 10.
Because, as a reminder to the listeners, the risk that we're talking about in investing isn't always you making the investment, right? Like the person that's investing in something is always investing in the person or the operator, right? Yeah. So like, just keep in mind, like it's not always you asking for investment. You're going to also measure that risk on the other side as well. And so if you came to me and said, hey, I have a project I want to do, and this is it, you might get like 10 seconds into the project, and I'll be like, absolutely.
Yeah.
Because I know it's a risk worth taking.
Because
you're on the other end of it.
If it's in my lane. If I came to you and said, hey, I have this, tire business that I want to start, you would be like, okay. Mm-hmm. Like, I mean, maybe you'd probably invest because I'd bootstrap it, but at the same time, I'm not in the tire business, right? Yeah. I'm much more likely to get money out of you saying, dude, I got this smoking real estate deal. Yeah. Here's what I'm going to do with it.
Totally.
This is it.
Yeah.
And I don't need to say much.
Yeah.
And you're in.
Yeah.
Right. So finding your lane, like we talked about that a lot, like sticking to your lane, especially in the beginning, and honing in your skills and your craft so that like when you do start to go out to the marketplace with opportunities that you have, they'll get funded with very little effort and a lot of ease because people believe in you. And people aren't going to believe in you inherently. Like, you have to earn that, and it's a results thing. So taking risks early to get the experience so that, like the first couple deals that I bought from a commercial standpoint, like I remember the second deal in particular, like a real rough property, ended up evicting everybody. Like contractors walked off the job on me. Like, I lost a ton of money on the property manager. We ended up making money on the deal, thank God. But and I was down there every day, which is not part of my business plan. Like, I'm typically hands off. Property manager was taking money from us, jacking up the accounting. Contractors were walking off the job. People were stealing from the property, all sorts of stuff. And I just bought it so right that it ended up making sense. But that being said, like, that experience, even if I had broken even, is invaluable because I can carry that forward to my next deal. That like, I went through all this stuff. So now I know what questions that I didn't ask the property manager that ended up burning me, or the questions that I didn't ask the contractor that ended up walking off the job, or the questions I didn't ask to the broker about the area, like things that I might have missed. That experience stays with you. So even if I had lost money, I'd still be happy with that deal, So when it comes to risk, coming to make investments, the biggest risk is not taking any at all. 100%. You just go. Get that experience and go.
Assess it and go.
That's it. Let's roll.
Love it, man.